Politics is so important in the States now. And yes, Trump wants to attract a lot more capital, but he's also got the other side of it as well, which is the tariff side of things. How are you and Jim playing the US at the moment? Because it still, to me, from the outside, looks like Ineos sees stunning opportunities stateside, which is the polar opposite of the concerns you have about the UK.
Yeah, look, Ineos Energy is something we created 4 years ago. It came out of some legacy assets we had of oil and gas that Jim had acquired over the previous 4 years. The mission is to grow it. We do believe long-term ownership of oil and gas is probably with national oil companies or private companies, and we're private in terms of the long-term destination. United States, interestingly, I remember 4 years ago being asked the question on this same channel about what would you do about Biden coming in and his desire to ban fracking. Yeah. Under the Biden administration, building off what Trump did, is over 13.5 million barrels a day, which is extraordinary. Well, no, but it is, and that's under a Biden administration. I think Trump understands energy, he understands energy security, he understands economics, and he understands business. All of those four things, I think, will come together in this next term. We'll see where tariffs play out.
But what does drill, baby, drill mean for the price of oil? Because as much as definitely the oil majors, the oilfield services companies, it was an okay time under Biden. I know it was a slam dunk because the permitting and regulation was the big complaint I hear from the Lorenzo Simonellis of this world as well. But having said that as well, what does drill, baby, drill mean? Because they do not want a price that crashes below $70 or below $60.
Well, I think Trump may like a lower price because it will help the economy, right? Price. No, but if you think about the economy. But however, I think right now all roads lead to China and OPEC on oil prices. So oil prices, I think, are range bound. I can't see a huge amount of upside. The recent pieces around the sanctioning of 150 tankers, the sanctioning of the insurance companies, that's what's suddenly seen this little pop up. It's sort of range bound 75 to 80 bucks right now in terms of Brent, or 70, 75 TI. The biggest drivers of where the oil price goes next is probably going to be China demand, which, as you said in your earlier piece, has still not yet come back, and we're not seeing that. And if anything, they're ramping up coal. And then what OPEC does in terms of limiting supply. Yeah. And I think the two things will balance out. The only one that will be interesting will be when Trump comes in is what happens with Iran and the various oil that arrives from Iran into other shores, and whether he'll tighten down on Iran, which is what expected. However, then you'll probably see OPEC loosening up some of its production. So I don't see any massive upside in oil price. I don't see any major downside correction right now.
Let me just test that theory and go straight to the China story, because that could be the wild card for this year. We're also used to the narrative that China isn't growing fast these days. It's stuck in the slow lane. It's not going to get out of that slow lane. But we are hearing talk that perhaps there could be more stimulus coming in March, and we know the first attempt in September, there was a lot made of it. It wasn't quite enough. We could see another wave. If China suddenly found its groove again, are oil markets ready for that demand?
No, so I think there's two issues. One will be, and we're seeing it with chemicals. I mean, our chemicals business is absolutely, we're seeing the effects of what's happening with the China slowdown. China is continuing to invest and try and inject stimulus into the pieces, exactly as you've described it. If we see a major uptick, I think we're seeing something like an extra 1.2 million barrels coming on this year in terms of new provinces like Guyana, like Brazil, other parts of the world. But we haven't got enough production coming through that would see a surge in demand. But equally, I think then you start to see OPEC that has at least 1.5 to 2 million barrels of spare capacity will start to come onto the market to balance that. OPEC are very conscious now of what they need in terms of balancing their books. It's significantly above $80 a barrel, certainly for Saudi Arabia these days. And on that basis, you probably start to see some of their production come back on stream.
Let me take you to climate change, because as we kick off this year, I think there are significant concerns that there will be a lessening of some of the motivation or ambition to get towards targets. And we've just had some data suggesting that, look, 2024 was one of the hottest year on record when it comes to global warming. It feels as though the story is getting more urgent by the day, yet world leaders might be reversing course. How concerning is that from an industry perspective when you are talking about perhaps there are too many disincentives to traditional energy?
I think that the thing facing the world right now, I think climate change is real. But I think that as we think about it as an industry, there are three things governments are worried about. One is supply. You've got to be sure the oil is there. Let's take gas as an example. 50% of the world's gas is in Russia, Iran and Qatar. The next place, therefore, you have to go for gas is the United States. Right now, we're shipping out of the United States at $4 a BTU. It's arriving in Europe at $15. The transport is less than $3 if you look at regasification and so on. So there's a massive margins, and that's a massive cost that Europe and the UK is facing. So security of supply is really important. Then it's cost. What's the price that you're paying for it? And if it's going to be LNG, so think about what happened with Russia this week. 15 BCM has been closed off at the start of January in terms of gas. That's 150 LNG cargoes that you're going to have to compete with China and Europe for if you want it to come to the UK. So again, price. Then the third piece is what's the cost of the carbon associated with it? And it's how as a government you balance all three. If you only go after two, you have a major issue. So you've got to find a sweet spot between the three. The push towards net zero is the right thing to do. It's simply about how fast can an economy adjust to get there. I would argue 5 years from now is a very aggressive target to get to net zero, even if possible, for the power grid. And I think this is what economies need to balance out. And you're seeing the United States do it in spades right now.
But you know the old argument as well, that if vast amount of money is spent on LNG infrastructure as well, a so-called transition fuel, then the money is not necessarily going to be there for the end destination fuel as well. It's like, do you go straight for the long hop, or actually do you go in micro steps? If you go in micro steps, then it's going to cost a lot of money along the way. You do convert from the filthier types of hydrocarbons. So how do you feel about that?
No, I mean, you know better than anyone, Steve, right? Money will follow returns. And so the capital's going to go where it'll make a return. But let me give you an example. Denmark, which has probably been the leading light, and I'm choosing Denmark because we have a position in Denmark, so we know it well. Denmark's been a leading light in the climate change and the energy transition. We have just now sanctioned the first major large carbon capture project in a former gas reservoir, oil reservoir, called Siri, with our partners, Harbour Energy, that now own part of this. So we're now working with Linda again after all these years. And that will take CO2 and it will inject it transshipment. And that's a major step forward. And Denmark has effectively come up with an integrated strategy that will see it cease production by 2050, but will continue to produce oil and gas over the interim period and build out hydrogen, build out carbon capture, and wind is a great example of what they did with Ørsted. That's how you do it on an integrated basis, but you can't just simply go for one of those three areas that you need to focus on in terms of energy.
I want to take you to capital markets and whether it's resonating at all in your circles, because we've been talking about the gilt escalation, we've been talking about the 10-year yield escalation, the 30-year stateside. The cost of money seems to be going up on financial markets. Is that causing some concern when you take a look at your capital investment plan?
Yeah, of course it does. It's a major issue for us. And it's a major issue inside Europe. It's a major issue right in terms of the UK right now. And then if you couple that with the fiscal regime in terms of taxes, it makes it even more impossible. And so I think, I said earlier that you asked about the government. There was a fiscal moment they created at the start. They said that was going to wipe the sheet clean. I don't think it will. I think there'll be multiple fiscal moments coming. And the rising gilts right now should be a really strong indicator that you have to get. I mean, I remember as a former finance director, you've got to get your balance sheet under control, and you have to be able to demonstrate to your shareholders that you have your balance sheet under control and you have the levers available for you to do that.
We've got to leave it there. Not before I quiz you on that tyre. It's very blue, Brian. How's your team doing at the moment?
Well, David Moyes is coming back. It's almost.
For our international viewers, Brian and I support nice big teams, but not quite big enough, who are struggling in the bottom half of the Premiership. We have now very kindly given one of our discards back to Everton.
Well, actually, he did full circle because he went through Manchester United, so Jim Ratcliffe's league did as well.
I was going to say, how's
some time ago.
Is it a story of despair at Ineos? And Jim comes in and goes, oh, blimmin' Rashford. And you come in and go, oh, Dyke.
No, I think Jim is on full cylinders in terms of Manchester United, but no, we're delighted to have David Moyes back at Everton.
Yeah.